Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida L076508, Georgia 69178, Idaho MLO 208023796, Illinois 031.0058339, Missouri, North Carolina I210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's the mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call mom.
All right, so welcome to Mortgage Mom Radio. I am Debbie Marcoux. I am the Mortgage Mom. And today we're going to be talking about, should you wait to buy or refi for interest rates to go lower? So we all know that we've been on this great path to where interest rates have started to come down. So to give you an idea, interest rates a year ago, so just about a year ago, were in the 7% range. They were actually as high as 8% at one point in time. But a year ago today, we were at about 7.25% to 7.5%. As of today, we're at an average interest rate of 6.25%. So why do I say average? Well, because it depends on the loan program that you are selecting. If you are looking at a conventional loan, those interest rates are going to be higher than a government loan, such as an FHA or a VA. FHA and VA loans today are actually in the 5% range. So we have actually hit those fives. And I have a lot of people that are calling me and asking me questions, and they're saying, should I be waiting? Should I pull the trigger right now on a refinance? Should I be waiting for them to go lower again to get even better? Or is it something that I should be doing today? I also have people that are in the same boat for purchasing a home. Should I be waiting until interest rates come down further to make that purchase? Or should I be waiting for the election before I make a decision to purchase a home? So we're going to talk about refinance and purchase, as those answers are actually slightly different. And I want to make sure that I'm bringing you guys the real-time information with what is happening with the market and how I am reading what we're going to see in the future, and my suggestion to you as far as what to do. I can see Heather has jumped on and said, hi, everybody. And Linda jumps on and says, hi, Debbie, refi in progress. Now rates are lower, but at least we are getting it done. So yes, that is absolutely awesome. And that is what you want to do. You want to get it done. And so that is what we are going to talk about. Linda, thank you so much for bringing that up, because that is going to bring me right into where I was going to go with refinancing. So one thing that I do want you guys to think about is that when you do a refinance, the refinance is done based on need. If you had absolutely no need whatsoever to do the refinance, and it didn't bother you to pay at a higher interest rate than what you have, and you don't care about, throwing money away every month, then I would say just sit still and let it ride and, wait and see what happens. But when you're in a situation that you either need to get debt paid off, or you need to try to drop your monthly payment for it to be more comfortable for you on a monthly cash flow basis, whatever that reason is that you are in need of thinking about doing that refinance, there is absolutely no reason to wait to see if rates will go lower. Remember that you can refinance now, and you can refinance again, and you can refinance again. Now, one thing to keep in mind is obviously cost and fees that are associated with a refinance. So we do want to make sure that the refinance makes sense, that what you are saving on a monthly basis is making sense, or that it is getting you into a better position for a future refinance that we could do at a much cheaper number as far as fees go. So how do I explain that? So for example, let's say that we are going to pay off debt. So you are a cash out refinance. When you are a cash out refinance, It's simple. Interest rates are just going to be higher. They're going to be more expensive. It's going to be more difficult to try to get you into the type of loan that we want to put you in, where we could be helping with a lender credit to offset some of those closing costs, if not all of them. But when you are just simply trying to do nothing more than reduce the interest rate for a better monthly payment, well, we can do those all day long. We can give credits to you to cover closing costs so that refinance does not cost you money, but it does drop your monthly payment and your interest rate. So we want to make sure that we are setting you up in advance for the future. So if you are in a situation where you just want to take advantage of a lower interest rate, that is absolutely it. You've heard me talk about them numerous times, doing a streamlined refinance on an FHA or a VA loan. Those are very, very simple, very easy to get your closing costs taken care of, very easy for you to just continue making payments month after month, but we are changing the interest rate and changing the monthly payment. That is very, very simple. But when we do start getting into things like cash out for debt consolidation, cash out to maybe consolidate a first and a second into one loan, those are going to be pricier, more expensive loans. And so we want to make sure that we're setting that loan up for you correctly. We're getting you what you need to take care of what you need to take care of. So whether that be home improvements you're wanting to add on to your home, we want to make sure we're getting you out enough to do the work that you want to do. So don't forget that whenever you get a bid from a contractor that says that it's going to cost you X, so let's call X $50,000 for today. So when you get that bid, I guarantee you, being somebody that has renovated 3 homes of my own, you never end up at that price. They are going to redo your kitchen. And when they repaint your kitchen, your dining room that is connected to your kitchen, now all of a sudden, it needs painted too. Now you've painted your dining room, but you happen to have one of those homes that opens up to the whole living room. Well, now you're painting your living room too. So there are a lot of things that do come up. There are also things that when they dig into walls and such that they weren't expecting. And now all of a sudden there's additional cost to finish the project. So we want to make sure that we're doing this cash out refinance one time. We are doing this one time. You are paying the closing costs one time. Now, mind you, the closing costs can be rolled into the new loan. I'm not saying that you have to come out of pocket with money, but it is more expensive, absolutely, to do a debt consolidation or a cash out refinance. But then when we start getting into, let's just lower the monthly payment. Let's lower the interest rate. We're going to take the balance that you have today. We're not adding anything to it. We're just trying to get you into a better loan program. So in those situations, maybe you do have an FHA loan and you've been paying mortgage insurance. You've got tons of equity, but that was the best loan program for you at that time. Then we might be looking at moving you from an FHA to a conventional. So when we do that, you are still a rate and term refinance. We are not only going to remove the mortgage insurance, but we're obviously not going to do that refinance unless we're also dropping the interest rate at the same time. So there are things that are going to happen in the future. There are products and programs and opportunities that are going to come up in the future. We are expecting interest rates to continue to get better. But that does bring me to something that I want to talk about in a second, which is where are interest rates today versus last week when we had our federal rate cut. So we are going to get into that in a second. But we do want to make sure that we're setting you up for success for future transactions as well as your transaction today. Now, if you're a streamlined refinance, like I said, an FHA, VA, all you're trying to do is lower that monthly payment. Keep in mind that you can do those every 6 payments. So you do have to make at least 6 payments minimum. And FHA and VA have slightly different rules around it. So with VA, you're going to wait just a little bit longer, probably closer to 7 months. But you can do those every 6 to 7 months. So if it doesn't cost you any money to do it, why would you continue to pay a higher interest rate and a higher monthly payment every month than to drop it today and then drop it again in 6 or 7 months and then hopefully drop it again to an even lower interest rate. So absolutely, with a refinance, I would tell you, do not wait. Do it based on need. Do you need it today? Would it save you money today? Then if interest rates come down in the future, we look at it again and we look at doing it with the least cost as absolutely possible. Now, to jump in, and I will get to my buyers, okay? We're going to talk about buyers as well. But to go back to what I said just a minute ago, where are interest rates today versus where we were a week ago when the Fed said, hey, we're cutting interest rates by 0.5%. So one thing that I do want to tell you guys is that I have gotten phone call after phone call after phone call, and it's not just buyers. I'm getting it from real estate agents. I'm getting it from many people that are in the market right now for some reason. They're working in the market. They're in the market looking to buy. They're in the market looking for a refinance. And I'm getting the question every day, did interest rates drop by 0.5%? Interest rates did not drop by 0.5%. The interest rates that we have today are actually slightly higher than where they were a week ago when the Fed cut the rate. And you'd sit there and you'd go, why? Why in the world would that happen? Well, basically, those interest rates that we have, mortgage interest rates, are based on the market. They're based on anticipation. We've talked about this in previous shows. So everybody was already pricing in that rate cut that we got. They were already anticipating it and knew that it was coming. So our rate sheets were all hyped up. They got super excited. Interest rates came down. We got our rate cut. And now we're kind of status quo. We've actually lost a little bit of the excitement. So again, mortgage rates are not tied to the Federal Reserve prime rate. They are tied to anticipation. They are tied to the market. They are tied to the mortgage backs, notes, bonds, securities, treasuries, right? That is what we are tied to and where investors are putting their money. So right now, we got the 0.5 point. The Fed talked about how they were most likely, again, nobody can confirm and say 100% that it's going to happen, but the Fed did say during the press conference that their goal is to drop the interest rate again in November and to drop the interest rate again in December and to continue to drop rates in 2025, as well as a couple more interest rates in 2026. So you would think that with this news, everybody would be excited and, our rates would be falling because everybody knows that it's coming. Well, right now we're in the watch and see phase. That is what's happening today. Are we really going to get that rate cut? They've told us that it's coming before, and then we haven't gotten it. So are we really going to get that rate cut in November? Is it really going to happen? Are we going to see inflation start to go the wrong direction? And that is going to halt them or stop them from making the decision to cut again. There's no way to know. We have to continue to watch and see what happens as new reports come out throughout every day, throughout every week, throughout the next 6 weeks, right? We've got 5 more weeks now till the next cut. We have to watch, wait, and see. So at the moment, everybody had the excitement. Rates got really, really great. And then for the last week, they've actually just tumbled off the cliff just a little bit. Now, mind you, interest rates are still far better than where they were a year ago. They are still far better than where they were 6 months ago. They are still far better than where they were 3 months ago and even a month ago. So we are in a great place right now. Interest rates are in a great the lowest that they have been in a very, very long time, but we are definitely not at the lowest level that we've had. And that is simply because rates are based on excitement, anticipation, and the market. So you never, ever, ever, going back to what I said, you never want to just sit and wait and try to time it. You need to do it when you need to do it. If you don't need to do it, fantastic. Great for you. That's awesome. But if there's a need, if there is something that it is going to significantly help improve, you don't wait. You do it. You get it done, and then we look at doing it again if we see that the rates have started to tumble and come down even further. Okay, so with that, we are going to take a super quick break. It's 60 seconds just for me to grab some water. And when we get back, we're going to start talking about should you be waiting to buy? And a lot of people are saying, well, I think I should wait until after the election. So I want to talk a little bit about that as well. So stay tuned. We'll be right back. Have you been waiting to purchase a home until interest rates have come down? Well, guess what? They have come down. They are falling. We are at a great place today. If you took advantage of this program today and you also combined it with a 2-1 buy down, your interest rate year 1 would be at 3.5%, year 2, 4.5%. And year 3 and remaining 27 years would be at 5.5%. This is a great opportunity to buy a home now before interest rates have fallen even further. And now you've got to compete with those other people that are out looking at homes. Get out there, start looking at property, and take advantage. Give us a call so that we can help you get things started. It's 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. All right, so welcome back to Mortgage Mom Radio. I'm Debbie Marcoux. I am the Mortgage Mom, and I promised before the break that we were going to jump into buyers. So should buyers be thinking about purchasing right now, or should they be waiting to see what happens with interest rates? Should they be waiting to see what happens with the election? So let's jump in and let's talk about that. And I want to remind everybody, this is an open show. I want you to put your questions into the feed. I will read those out loud and answer them for you. I want you to put your opinions into the feed. And I want you to let me know that you're here. So say hi, give me a thumbs up, let me know that you're here and that you're watching. And I absolutely love this. I want it to be interactive. The more questions that you guys ask me, the better that the show is, the better that the content is, and the more education and information that I can deliver. So please feel free to do that. So let's talk about buyers. Number 1, let's hit the very first one. Should you be waiting to buy until interest rates have come down further? So once again, buying a home is a very personal thing. Buying a home is something that you do because you need to do it. There is a reason why you are buying a home. You are buying a home because you have outgrown where you live. You're buying a home because your landlord has told you that you've got 30 days to move, that they're planning on selling the property. You're moving for a reason. You're getting relocated with your job. So when it comes to purchasing, I wouldn't necessarily say, let's just sit and wait. Now, one point in time, I'd say a year and a half ago, 18 months ago, there were a lot of lenders that were talking about, date the rate, love the house or whatever. I can't even remember the way that they would say it, right? But it was basically like marry the house, date the rate kind of a thing. Okay, so that was something back then, and I was never a big advocate of that. I really do believe that you need to buy something that you can afford. So dating the rate when it's going to absolutely put you in over your head is not something that I would recommend. I instead talked a lot about doing, as you saw in my commercial, the 2-1 buy down programs and things that would actually reduce that interest rate for that first couple of years while we rode out the market for the interest rates to get to a point that they were starting to come down and opportunities of refinancing were beginning to show. So it was giving you time at an affordable payment for you. So I would say today that would still be my philosophy. If the interest rates today, number one, interest rates are significantly better than where they were. So if you did get pre-approved 18 months ago, a year ago, even 6 months ago, and you didn't like the number that you were given, you couldn't purchase something that you wanted, liked, needed, size-wise in the price range, you just didn't qualify for that, for what you needed. I would absolutely recommend that you do reach back out to your loan officer or you give my office a call and let us figure out where is your pre-approval today? Because as interest rates come down, home affordability becomes higher, right? So the same exact payment is at a higher sales price than what it used to be when interest rates come down. So to give you an example, on a $500,000 property, if interest rates dropped by 1% on a 30-year note loan, that is a $500 a month savings. $500, which is why I've also been pushing so hard on these streamlined refinances. You have no idea how many clients that we have in FHAs and VAs that are in the sevens, where they could be getting into the fives today. And the majority of people have a mortgage that is $500,000 or more. I mean, let's just face it, the national average across the country right now, national home sale price is $448,000 last I checked, and I could be off by some digits, but I'm very, very close. $500,000 is a very standard mortgage these days. So if you can save 1% and save $500 a month, why would you not look at doing a simple, quick, and easy refinance? So that's to throw that off to the side. But for a purchase, that $500 makes a huge difference in what that sales price could be that you would qualify for today versus what you would have qualified for before. So that's number one. Number two is that as interest rates do continue to drop, and I have talked about this on my show, and a lot of people didn't believe me, but we've already, get this, are you ready? Since last week, the Federal Reserve came out and said that they were dropping the interest rates by 0.5%. We have seen a 46% increase in mortgage loan applications. 46%. So if that happened from one rate cut, then what is going to happen when we get rate cut number 2, rate cut number 3, right? A lot of buyers are going to come out of the woodworks. They're going to get excited. People are going to get off the couch and out onto the street, okay? So you want to try to be looking for something before you have a bunch of competition. I looked again today to see where our listings are at as far as the number of listings, how much supply do we have? Are we still in a position that we have a shortage of listings? And we are still in a position of having a shortage of listings. We've got about 1.8 million, and this is again about 1.8 million listings throughout the United States right now. This is still significantly down from where our market was in 2019, prior to the pandemic, prior to interest rate cuts that we got, where the government felt like it was a good idea to bring interest rates down to practically zero. So we are still the housing at that point in time, listings across the nation at that point in time were at roughly 2.4 million, and we're at 1.8. So right now we've got about a 3-month supply of homes available. As interest rates get lower, more and more people are going to get excited, and more people are going to start purchasing, and you are going to see that competition start. You're going to see that shortage start to feel really icky again. So if you can start that process before the craziness begins, I would absolutely recommend it. And again, I've said this numerous times. It was just that we had a long time to go before we got to this point. Well, we're here now. We are here now. Bells should be going off if you've been telling yourself you really want to buy, but you've been waiting. Bells should be ringing. Now, the other thing to keep in mind is, the election. And that is the next thing that comes up when people call me on the phone is like, should I do this now? Or should I wait for the election? Depending on who gets elected, it's going to determine where interest rates go. They're going to drop interest rates after the election. Okay, so we're going to talk about that. We're going to talk about the election. We're going to talk about the Federal Reserve, and we're going to talk about when they increase and decrease rates and what that has to do with politics, okay? But before I do want to say that Armando says this happened in 2019. Rates were at 5.85 when I sold and bought. Then when Trump became president, I was able to refinance at 3 in 2020. We won't see 3%, but lower rates are coming. Or he said good rates are coming. So Armando, you are absolutely right. Interest rates were in the 5s in 2019. Absolutely. We had a pandemic. I am not going to get political in this show. That is not what this show is about. This show is about trying to help you guys, to educate you, to get you moving in the right direction, help your family with cash flow, help your family to purchase a home. But the one thing that I can say is that the interest rates at 3% in 2020 was a direct result of the pandemic. And again, I do want to make this very clear. The Federal Reserve is who chooses to manipulate the interest rates. The Federal Reserve is a completely independent body, an independent piece of the government from the Democratic or Republican or, parties, right? The Federal Reserve has absolutely nothing to do with either one. They chose with the pandemic to try to stimulate, to try to make sure that we didn't end up in massive recession. They made the decision to drop the interest rates as low as they did. That just happened to take place during Trump's presidency. Again, I am not going to get into politics right now. I'm not going to say right now which one that I feel is better. I am such a person in the middle right now where there are so many things on both sides of the spectrum that are great, bad, and awful, that's not what I want to get into at the moment. But that happened because of the Federal Reserve. That had nothing to do with Mr. Trump. Now, was the economy great? Sure it was. And you guys can all get to your own speculation as far as why was that? Now, a couple of things in my mind that I saw being a third party, looking outside and getting really upset when I saw it was all of the free money that they were printing. Any person at all got a check. Why? Those stimulus checks should have been given to those people who needed it. Somebody who was still working, somebody who was still making money, somebody who did not take any kind of cut in their job. Their employers allowed them to work from home. Honestly, not everybody should have been receiving stimulus checks. Everybody received stimulus checks, just about everybody. And that does not help today's situation. That did not help our inflation situation. What that did is it put people in a position where they had more money in their hands. So what did they do? They spent it. When they spent it, that made our economy flourish, right? So again, I don't want to get too deep into, who is a better candidate, because there's a lot of reasons why I would look at one side over the other and say, we are in a situation right now where we do need to have somebody who's going to come in and be strong, who can make sure that we don't end up in a massive recession for our economy. And, there's one side that could be very good at that. And there's one side, in my opinion, that's not going to be very good at that. And again, I just don't want to go there. This is not a political kind of show. But my point is, where I was trying to go with this is that the Federal Reserve is who is in control. The Federal Reserve made the decision to cut the interest rate by a half last week, and that had nothing to do with either political party. The Federal Reserve is saying that they are going to cut rates at the next meeting in November. They are saying they're going to cut the next interest rates again at the next meeting in December. Again, that has absolutely nothing to do with either political party. It doesn't matter which candidate gets elected. What the Federal Reserve is what the Federal Reserve does. Okay. Now, this is one piece of opinion that I can give. And again, I'm not going to say either one as far as to who I think is better, but depending on where we are as an economy is what determines whether the Federal Reserve chooses to cut rates or raise rates. So your decision as people that are watching my show and voters that are going out there and voting for who they want to elect is to figure out who is going to be the best party to get our economy going, to keep our economy going. If inflation stays low, jobs stay relatively good, the Federal Reserve is going to continue to cut those rates. If inflation starts to go the wrong direction, we are not going to get those rate cuts. So again, that's where you guys make decisions as far as who you're going to vote for, is what's best for the economy. But neither political party have absolutely anything to do with when the rates get cut or when the rates go up. So I do want to make that very clear. There are a ton of people right now, that are saying, I want to sit around and I want to wait for the election, and then I'll decide if I want to buy a house. That election is not going to do anything, nothing in the short term. Absolutely nothing. Remember that it takes a very long time to get us into trouble, and it takes a very long time to get us out of trouble. Where we are today and where we will be after an election in December, January, or February of next year is going to all be very, very similar. Buying a home is based on your need and whether you need to do it. And if you need to do it, my recommendation would be Get a jump start ahead of all of the people that have been waiting, watching, and wanting to buy, but they've had it on hold. Get out in front of them and get the opportunity before they get into the market and you've got a lot of competition at your side. So Armando says, yes, sorry, didn't mean it like that. Ha ha. And then Joe Vera says, hello, everyone. So Armando, it was not a problem. And trust me, I get it all of the time. I get all of these questions all of the time. People want me to say, what I think is best or which candidate is going to give us the lowest interest rates. I just want to say this. It has nothing to do with the candidates as far as the Federal Reserve makes the decisions. Now, yes, the Federal Reserve is making the decisions based on the economy. They're making those decisions based on what is going on. Where is inflation? Where is employment? Where are retail sales? What is going on in the economy is what they are choosing to, when and how much they are choosing to raise or cut interest rates, but it is the Federal Reserve that is manipulating that interest rate. So with that, if anybody else has any questions, please go ahead and throw those in the feed. I'm going to go to a super quick break. I want to give you guys time to be able to answer questions for you. And when I get back, if there are no other questions, then we'll close up the show. So stay tuned. Are you in debt? Have you already pulled a home equity line of credit and now those credit cards are charged up again? Don't feel bad. There are many people in your same position. It's been a really rough couple of years, but don't fret. Interest rates are starting to come down and you have the opportunity to do a refinance to get everything rolled up into one new loan payment. Give us a call. Let's take a look. Let's see what you owe. Let's calculate what those interest rates are on all of those balances. And let's see if we can't get you into a better financial position. Let's get that cash flow under control. Give us a call. It's 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. Or head on over to our website at mortgagemomradio.com. All right, so welcome back to Mortgage Mom Radio. I'm Debbie Marcoux. I am the Mortgage Mom, and this is going to pretty much finish up the show. I can see that Why Not got on and says, hi Wednesday buddies. So hi to Why Not. It's good to see you. I haven't seen you on in a couple weeks. And my dad jumps on and says hi. So Dad, thank you for being my biggest fan. I love it. But again, you guys, I hope that this helped. I hope it helps you guys to decide whether or not you feel it's best to get a refinance started. Now one more thing, I have a lot of clients who truly need some help. They're in a position where they have a very low interest rate on their mortgage today. They absolutely do not believe that there is any hope available for them to be able to do any kind of a refinance to get their debt under control. So let's talk about it. The American credit card debt right now is higher than it has ever been in all time. So there are many of you out there that do have a lot of credit card debt, and many of my clients are unwilling to call because they are just so dead set against losing their 3% interest rate that they have on their mortgage. Please do not put yourself in that position. Please reach out and give us a call. Let us help you. Let us show you what those numbers are. Ultimately, it is your decision if you want to move forward with an application. We do not bite. We do not push. We are not by any means hounding you to get things started. We are here to help you, to educate you, and to show you what numbers would look like. If you feel that it makes sense for you and your family to do that refinance, then we go ahead and we pull the trigger and we get it done. There are lots of opportunities right now for home equity lines of credit to leave your interest rate right where it's at, complete full cash out refinances to get that debt paid off. There are truly options open for you for the possibility to get yourself in a better position every single month. So please do not just discount it and say, there's no help for me. There's nothing that I can do. Pick up the phone and call us and let's see if we've got something that could work. We are very, very honest. And if we don't have anything that is going to work for you, we are going to tell you. We just don't have anything to help you today. But reach back out in 6 months. I think we're going to be in this position then, I'm going to put you on my list of people to reach out to if we get there sooner. But for right now, yes, you're right. You need to, stick it out with what you've got. So please don't limit yourself. At least call and find out what that option is. I can see why not says, is it worth waiting until all ducks are in a row to start looking, or should it be an ongoing process, looking for what and where while getting finances figured? Well, I think that you, as far as looking for where, what, I think you do need to figure that out. And there's absolutely never any hurt or harm in window shopping. If you're thinking about relocating to another state and you're trying to figure out where that state might be that you want to go to, in the meantime, you're saving up some money for that down payment. All of that is great. You have to have some sort of an idea of where you're looking, and then where you're looking, how much do you need to spend to get what it is that you want? And then based on that, how much money do you need down payment based on your income and what you qualify for? So I think it does all go hand in hand. And I would not ever tell you to not be doing research on all angles in every direction as you're moving through the process of figuring out, how to buy, what to buy, where to buy. Just keep doing what you're doing. You're doing a great job. Linda says, she is right. My husband didn't want to give up our 3.6% first, but it turned out to be better to give it up and pay off the HELOC. Call Mortgage Mom. I'm a fan, from Linda. Oh, Linda, thank you so much. So, yes, for Linda and her husband, it absolutely made sense for us to be able to help her to get everything consolidated into one based on what they owed, on their line of credit, based on what we could get them in extra cash to pay off some more debt. It absolutely made sense. When you start looking at the interest rates that you're paying on credit cards, you start looking at interest rates that you're paying on home equity lines of credit and home equity loans, and then where those balances are. So how much do you owe on those balances versus how much do you owe on that mortgage note that you've got that low 3.6 on? In your situation, it absolutely made sense. And in somebody else's situation, it may not make sense. And we are here to show you, we are here to help you to run the numbers. And again, ultimately, it comes down to you and what you feel is best. And thank you, Linda, for being my advocate. I sure do appreciate it. So with that, guys, if there's no more questions, I don't see any more in the feed, I'm going to shut the show down for today. I will be back again next Wednesday at 1 o'clock. So I want to say one more thing to you guys. I have 2 text messages. I've got a mom list and I have a live list. The mom list has about 4,500 people on it. And I send out a text message to that live list once a month. Just once a month, because a lot of those people opted in many, many years ago. They may not be interested in mortgage anymore. And I'm trying to do my part in not being one of those people that drive you crazy with text messages. Then I've got a live list. The live list gets a text message every single week when I go live. So if you like the show and if you don't ever want to miss one, and you have found that you get a text message once and then you don't get one again for weeks at a time, make sure that you opt yourself in to my live list. So text the word live, LIVE, to 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. But text the word live. No quotation marks. It can be uppercase. It can be lowercase. It doesn't matter. Just type in the phone number and in your message, type live, LIVE, and that will get you opted into the weekly notifications that I am going live and that the show has started. And it gives you the link just to click right on it and join. So again, with that, I love being here. I'll see you guys next week right about 1 o'clock. And please give me a thumbs up, give me a like, and I hope you guys have a great rest of your week. Talk to y'all real soon. Bye-bye. Are you in debt? Have you already pulled a home equity line of credit and now those credit cards are charged up again? Don't feel bad. There are many people in your same position. It's been a really rough couple of years, but don't fret. Interest rates are starting to come down, and you have the opportunity to do a refinance to get everything rolled up into one new loan payment. Give us a call. Let's take a look. Let's see what you owe. Let's calculate what those interest rates are on all of those balances, and let's see if we can't get you into a better financial position. Let's get that cash flow under control. Give us a call. It's 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. Or head on over to our website at mortgagemomradio.com.
Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida L076508, Georgia 69178, Idaho MLO 208023796, Illinois 031.0058339, Missouri, North Carolina I210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's the mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call mom.